over the VIX and some new observations for algorithmic trading setups, new VIX filter ideas that I've come to realize watching this current market environment that would be beneficial in testing and developing trading systems. I want to share those. What I have here is the first indicator at the bottom is the average range of the VIX on a daily chart. I've talked about this before. I've made a video about this first indicator before, so that's not new. You can see how it's dropped from 1027 when the market was in a downtrend and the violent reversal and a really quick downturn in that to near all-time lows. The second indicator is new, and it's based on this observation of how narrow the VIX daily range has been since about November the 15th, since right here. And I went back and I said that's 35 days ago. So has there ever been a 35-day range that's this narrow on the daily chart? How narrow that VIX range is. You know, the markets, they're narrow for this amount of time and then they move a little more. They're narrow for this amount of time, it moves a little more. And so it's some of the lowest VIX readings we've seen in a while. And I measured this at the bottom. I call this the VIX MD range. It's just the highest high of the last 35 days minus the lowest low of the last 35 days. No secret to that indicator. Just looking at the high to low range over the last 35 days, 2.77 points on the VIX. That's surprisingly low to me, that it's been that low. You can see just December 15th, about middle of last month, that number, the high to low range was 10.26. But if we're going back 35 days, it included this data right here. And so it dropped, and it's been narrower and narrower and narrower. But you can see how high, you know, when the market is in this range right here, these values are 10.6. It dropped to a low of 4.3 in July. It was at 5.8. Let's look at this interesting observations. The last time you know that the VIX was this low, you can probably guess, is 2017 when the VIX made an all-time low back here. But it even most of 2017 was above this number. Also made the lowest VIX low and some of the lowest average daily ranges. So you see it went down to 2.44 on March the 21st, first quarter of 2017. And so you can see 2.44. So near an all-time low, even though the VIX values of 13.35, and in 2017 you had these low values of in the eights, in the eight handle, 8.84 there, and you have a low of some eights in here in this range, or nines. And so you had this lowest VIX reading in 2017, and the average daily range back then was at 2.44. You can also see that back in 2005. You see I put a yellow line at 2.76, the current 2.77, the current value, and you see it intersect back here in 2017. Also in 2006, 2.36 was the lowest value I've seen on this chart. It was also below this value at some point during or close to that value back in 2005, 2004, 2005, 2006. And we know what happened after that. It took several years to develop the 2008 financial crisis when the VIX was low. And in 2017, when the VIX was this low and had these kind of characteristics, you saw first in 2018, you saw a VIX spike, and then in 2020, the pandemic, so a few years after that. So we don't know how long it's going to be this low, but it can be a VIX filter, the average daily, they're the highest high. You have the average daily range of the first indicator, the highest high of the last 35 days. That could be modified as well and looked at. But another interesting observation that I want to share that really pops and stands out is how the NYSE TICK, this is the average range of the NYSE TICK. And I show it going from around 1820 to 2155, so about 330 point pop. You can see a noticeable trend change in the VIX, even though we're getting a drop in the ranges, highest high, lowest low of the VIX. The TICK ranges are breaking out, the high of the NYSE TICK. And so the NYSE TICK tells you the number of stocks in an uptick minus those in a downtick, and it contracts and expands. You can see where it was in 2019, very narrow ranges in here, and then you kind of see a gradual expansion since the pandemic. The highs are higher and the lows are lower since the pandemic. And so you can see the highs and the lows, the differences. Since the pandemic, it's contracted lately. You can see a little bit of a contraction here, but it's starting to expand again while the VIX ranges. Could this indicate a breakout because the VIX ranges are narrow, but the tick is starting to expand? Does it lead the breakout? And we can look back in 2018, 2017, when the VIX, at the end of 2017, you saw the NYSE TICK ranges were 1432, very low. And then you see this trend up. The VIX shot up at the beginning of 2018, and the NYSE TICK range almost 1,000 points higher, 2363, before contracting and then expanding again in the fall, and then, of course, expanding in the pandemic. So the TICK ranges expanded during the pandemic. They expanded in 2018 after being this low, and so it was lower at the end of 2017 at around 1,400 as compared to now. It was at, in December, it was December the 7th, it was 1,822. And so a month later, it's 300 points higher. This was the market this tick expanded at the end of January of 2018, 1754. So about 350 points average range expansion, and then the VIX also expanded. Let's look at that. These are lagging indicators, so you can see the VIX starts to around January the 19th, it starts to tick higher. January the 29th, it really ticks higher. And so let's zoom in on that. 2017, January the 30th, it pops towards the highs, and then it really gets going on February the 2nd. February the 2nd is a breakout of the year highs. And so what is the tick average range on February the 2nd, 2018? To give a similar comparison, February the 2nd, we can go back to February, that was a Friday, is 1826. 1826. It's about 400 points higher than this low value at the end of 2017. Around 400 points higher. And you can see now that the 1860, about 300 points higher. So another 100 points. It's close. So it could be indicative. I mean, if you look at the price action, a lot of back and forth. And if you look at the intraday back and forth of the NYSE TICK, you can see it went up here to plus 1,000, down to minus 1,000, up to plus 1,000, down to, these are minus 1,200 readings, minus 1,200, and then back towards plus 1,000. Didn't quite make it at the end of the day. So you have big round trips you don't normally see this many round trips lately in the TICK, NYSE TICK, where it's plus 1,000, minus 1,200, plus 1,000, minus 1,200, and then back towards plus 900. And so the TICK is going wild, the market is moving, while the VIX is still relatively calm and within its 35-day range, average daily range 0.88, but it's ticking higher than it was at this low point in December the 18th. So interesting dynamics in the market. It was a tough week for us because the market seemed compressed, more compressed than it should seem, based on all the underlying dynamics of the market, the technicals, the back and forth of the tick. The cycle of trend just hasn't been there, and it's as if there is a contraction and compression that is due for a breakout, and these indicators are helpful in showing a path for how that's done that in the past and how it could potentially do that in the future, as well as give us some tools for testing and backtesting filters for algorithmic trading systems, when you should trade trend and when you should trade counter trend. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.